Hey everyone, I'm John Hopkins with the Hopkins Lending Team, powered by the broker, back again with your weekly housing market update. If you are buying, selling, or just trying to understand where the market's headed, this is your pulse check on rates, trends, and strategy. Let's kick things off with what moved the market last week and what it means going forward. The big headline: the Federal Reserve held rates steady, just like the market expected. But what really mattered, it was their tone. Investors, they were bracing for aggressive rate hike projections, but the Fed, they kept things relatively calm. That was enough to ease pressure in the bond market, which translated into slightly lower mortgage rates. Add to that stronger than expected existing home sales and steady jobless claims, and we've got a market that's stable but not overheated. Exactly what the Fed wants to see. So where are rates now? Conventional 30-year fixed at 6.67, FHA 30-year fixed at 6.32, VA 30-year fixed at 6.18, which makes 9 straight weeks below 7%, which is helping more home buyers re-enter the market with confidence. To put this in perspective, let's look at how far we've come this year. FHA, we started 2025 around 6.6, now down to 6.32. VA followed suit, slipping to 6.18, and conventional rates were flirting at 7 in January, and now they're 6.67. No, it's not a rate crash, but it is a slow, steady move in the right direction. And that is opening door for opportunity, which is where I really want to focus. A recent HomeLight survey found that buyers today, well, they're adapting. And they're getting bold. We're seeing more people say yes to fixer-uppers. They're locking in homes at higher rates, knowing they can refi later, and they're leaning into creative options like rate buydowns and seller concessions to make monthly payments more affordable. They're not waiting for the perfect moment. They're making smart moves now. So what about the rest of 2025? Here's what leading experts are saying. Wells Fargo expects rates to average 6.9 this year, while Fannie Mae thinks we could see 6.5 by the end of the year. And Morgan Stanley, they say rates may trend lower, but only if inflation keeps falling. So if you're holding out for a return to 5%, it's going to be a long wait. But there's good news. You don't need a 5% rate to make homeownership work. Here are a few of the affordability strategies we're putting into play for clients right now. We have temporary rate buydowns. What's that? Lower your interest rate by 1 to 2% for the first few years. It's a smoother entry into your mortgage, especially if you plan to refinance later. Seller paid concessions. We are negotiating closing cost credits for rate buydowns, especially on homes that have been sitting a little longer. We have down payment assistance programs. From state programs to zero down options, we're helping buyers get in with less cash out of pocket. Bottom line, you don't have to wait for the perfect time. You just need a smart plan, which is where we come in. So let's bring it home to Hampton Roads. What's going on right here? Well, if we look at the average home price, it's around $391,000. Inventory, this is huge. It's up 23% from this time last year, and market forecast is 4 to 5% growth in home sales. If rates stay steady, we're seeing more listings and more activity, and that means more opportunities for well-prepared buyers. We've got some big news coming this week, so let's talk about that. The core PCE inflation report drops Friday morning. This is the Fed's favorite inflation metric and absolutely has the power to move rates up or down, and fast. If inflation cools, rates may continue sliding. If it comes in hot, we will very likely see a bounce. We're going to be watching this very closely, and I'll have an update for you next week. So here's the takeaway. This market, it rewards confidence and preparation. If you're thinking about buying, selling, or refinancing, don't try to time the market. Let's build a plan based on where you are now. Reach out to the Hopkins Lending Team, powered by the broker, and let's talk strategy. Thanks for tuning in. Like, follow, and share with someone who needs to hear it. And I'll see you next week. Take care, everyone. Bye.